Mr. Wolfe, thanks for joining the Let's Grab Coffee podcast. I appreciate having you on, man.
Great to be here, and I'm thrilled to spend an hour with you. So thanks very much.
Likewise, your time is very valuable. People know you for different reasons and you wear different hats. Of course, you're a lawyer, an investor, a teacher. You're now a retired partner at Kirkland Ellis, a very notable bulge bracket law firm where you practiced PE M&A for about 17 years. That's a lot of stamina, my friend. So I have some questions there for you. And then you lead Funded Ventures, which is active in sort of the search fund, small business acquisition space. You've done SaaS roll-ups that you've exited in the past. You teach several courses at Washington U, University of North Carolina, and most recently Northwestern, part of the alum. You serve on several boards, audit committees in Chicago, specifically Chicago Public Media, Intersect Illinois, Breakthrough, a bunch of other kind of civic duties that you layer on. You're a father. You're active in your community and your church, as far as I've understood, and just a overall well-rounded gentleman. So super excited to have you on.
Very much again for having me. I'm thrilled to be here.
One usually, I mean, I kind of saw your background, and someone who starts in FP&A, financial planning analysis, has a finance background, doesn't always pivot. It's not very uncommon, but someone that goes from FP&A to decides to get their JD and then start out at Kirkland Ellis is not the most common trajectory. Why was that the one for you?
Yeah. So I've always loved numbers. I studied decision sciences when I was an undergrad. That's sort of using statistics from a forecasting and quality control perspective. I studied that in undergrad. And when I got out, I got out of school. I thought finance would make a lot of sense for me because of the numbers, because numbers have always come easier to me, frankly, than other subjects. And so I came out of undergrad, and I was very lucky. I came out of undergrad in 2000, so sort of at a interesting moment of the world when you think about what was going on with e-commerce. And I very early in my career had decided that I thought this e-commerce thing was for real, and it was going to stick around. And thematically, it was going to be sort of this massive tailwind. And so in 2002, I went to work at Amazon out in Seattle. My wife and I had just gotten married. We're both from the Midwest, and we went out there, and I spent a couple of years working as a senior analyst in Amazon's financial planning and analysis group. And this was sort of Amazon of old, right? Amazon had been around for a while, but still, relatively in its infancy. Most folks were sort of in one building, and it was a wonderful way to, start a big part of my career, sort of getting to see something that was really on trend and had good momentum behind it. And I really enjoyed, although I was just there for a couple of years, I really enjoyed the opportunity to sort of see Amazon up close. And I could tell even then that Amazon was going to be taken off. It was really exciting to really think about how to, in a world of infinite growth potential, how to use financial metrics and math and finance to be able to take a strategic plan and really build it into a financial plan that would allow the company to continue to grow at the pace it was growing.
How much do you think your business background influenced you as a lawyer? Because I often hear, having now been in the industry for a year, which is not much, but I have seen the difference between folks who have in-house experience or who come from an MBA background or who were in business previously. There is a bit of a difference. There's a natural business acumen layered on top of legal acumen. Did that help you? Was that advantageous for you? Was that strategic?
It helped a lot. So there are a couple of things that I did at Amazon. One of them was I spent a lot of time building what are called discounted cash flow valuation models. So I would look at different initiatives that the company was thinking about undertaking, going into new countries, new product lines, different programs or projects. And I would try to model them out and get a good sense of what the future stream of cash flows might look like. And really, the point of that was to help us inject a level of rigor and analysis to be able to figure out, for all of these potential initiatives or programs or projects that the company might undertake, which were the ones that would most likely, create sort of a good return on the invested capital, a good series of cash flows. And that process, that modeling is often very, very similar to how you'll value a business in an LBO transaction or from a private equity transaction. And so I was very lucky to have although I was just at Amazon for a couple of years, to have this good baseline understanding of how to value businesses and how to think about sort of the invested capital and the return on that invested capital and how that translates into enterprise value or into equity value. And so for me, those experiences were very, very, very valuable when I then became a junior associate a few years later after law school, working for large private equity firms that were focused on doing deals.
When you think back to, as a good segue, when you think back to being a junior associate at K&E, what were those days like? Especially because I think when you were there, it also coincided with, some fun market cycles, like you were there in '08 doing sort of like the credit melt
Exactly right. So I really had an interesting seat. I had summered at the firm, I think in '07, which was like the
the
height
hype. Yeah.
of the LBO boom. And I really remember, partners getting ready for closings and staying at a hotel next to the office for the night. It was really frenetic. And I think, in hindsight, some folks who were sort of in the flow then would say, like, we were starting to see the cracks, and there was this great sense of urgency by our sponsor clients to get those deals closed, right? I mean, typically you sign a deal and then the closing doesn't happen for 60 to 90 days later. And you were sort of right at this moment, and we really haven't even returned to that moment where deal flow and volume was so high. Everyone was so stretched trying to get these deals done. The debt equity splits, the amount of leverage on these LBOs was about as high and extreme as we've seen in the market sort of ever since. And so that was my summer experience, this frenetic pace. And then fast forward just a few months, and the bottom had fallen out of the market. The credit market was basically closed, and of course, an LBO is leverage. And so, if you don't have a key ingredient to what makes the deal engine work, deal flow immediately started to dry up. And so, I started Kirkland at a time. My first deal was for a large private equity firm here in Chicago, and it was an all equity deal. There wasn't a single dollar of debt. That's very, very unique in the LBO market, but that's sort of what I was experiencing right after I joined the firm, and that really meant a couple of things. One, it meant, and this really feeds into sort of the arc of my career. It meant that I needed to keep myself busy because deal flow was sort of way down, but there were an awful lot of us junior associates who had summered at the firm in a different market and sort of at a different time. And so one of the things that I decided to do was to really, find something interesting that could keep me busy beyond just doing deals. And at the time, Chicago was immersed in trying to land the Olympic bid, the 2016 Olympic bid. And so I spent about half of my time while I was preparing for the bar exam. And then after I joined Kirkland for about the first 18 months, really immersed in the Chicago Olympic bid, actually sort of embedded in the bid and working on a bunch of things that were sort of necessary to make Chicago as competitive as we could be as part of first the domestic phase of the bid process and then the international phase of the bid process. And that was something that I think accrued pretty well to Kirkland's benefit because at the time, that bid was sort of the center of the universe in Chicago. Most of the large civic leaders at the time, Mayor Daley, the Ryan family, a lot of folks who are sort of leaders in Chicago were very, very immersed in that bid process, and it gave Kirkland an opportunity to also become very engaged and embedded in that race. So I spent a lot of my time doing that.
What were some of the things that you did during that bid process?
Yeah, so there were a couple of things that I was focused on. One is you have what's called the guarantee process. And so basically the IOC will go to all of the cities who are bidding to host the games and will ask for a series of commitments. These commitments can be, an unfettered guarantee by the city to backstop a financial commitment to host the games, but they can be a myriad of little things too. It can be, in our case, we had to collect letters of commitment, what we call sort of guarantees from all sorts of CTA and Metra to make sure that the IOC had a level of commitment throughout the city around all of the things that they needed from an operational perspective to have confidence that Chicago had the level of support that they needed to host the game. So a lot of my time was working with different parts of the city and the state to make sure that all of the various stakeholders and constituents were on board with the things that the IOC wanted to get a level of confidence on. I spent a lot of time as well preparing for, should Chicago win, what the governance would need to look like. You put together what's called an organizing committee, probably would have been called SHICOG, in Chicago, but getting in place sort of the governance structure that we would have in place around that next phase, should Chicago win. I spent a lot of time helping the team get ready for the IOC visit, which is really sort of like a huge part of the overall bid process. There are different panels and Q&A by the IOC members. So I spent a lot of time on that, and then I spent quite a bit of time on legislation as well. And so, as you can imagine, you've got events where you've got pentathlons and shooting and carrying guns around related to the IOC, the Olympic Games. Just as one example, you need to have some legislation that's passed by the state to make sure that the competitors can carry their guns on the CTA, just as one example, as they're going to an event. And so there were a handful of sort of formal pieces of legislation that we needed to prepare that would have gotten presented to the legislature had Chicago, won the right to host the games. So I spent a lot of my time during those first 2 years at the firm focused on M&A transactions, focused on the Chicago Olympic bid. And then what I also did was, after a couple of years, I ended up taking a short leave from the firm for about 6 months. My wife was from St. Louis. I went to law school in St. Louis, and I had been invited by a civic leader in St. Louis to go down to St. Louis and serve as the deputy superintendent of the St. Louis public schools. So I was the COO and the deputy superintendent, really just helping to allow our new superintendent to come in and not have to worry about a lot of the complexities from an operational perspective, so he could focus on what was going on in the classroom, which of course is the most important thing.
Yeah, there's certainly a lot to unpack there. I think the one place I want to go real quick, and I don't know if that's how you viewed that stage of your career, but the way I internalize it is you sort of take this concept of, if you're familiar with Nassim Taleb, anti-fragility, right? And I know it's for like the black swan anti-fragility, for him it's more geared towards markets and anticipating shifts, but I sometimes use it for career development, self-development. And for you, it's like, instead of avoiding volatility, you sort of sought after it. And an anti-fragile person is, someone who sort of exposes themselves to uncertainty. They're trying new roles, projects, industries. They sort of use this barbell strategy where, you're exploring options. There's not a lot of downside. And you sort of did this even before this shift to being the superintendent in St. Louis. Even, you taking on this bid project just, I think, shows the importance of being malleable, shifting based on what trends are looking like, and just staying relevant, being proactive, demonstrating leadership. Yeah, very, very key sort of trend that I'm seeing as part of your career.
Like, a couple of thoughts. One, at the heart of it is relationships, right? And so the reason I went to Kirkland was because we had a good family friend who was a leader at the firm and who introduced me to the firm. The reason I went down to St. Louis was because I had a very strong mentor and a very good friend who's a giant civic leader down in St. Louis, who had reached out to me and asked me to consider taking that role. And that's going to be a theme throughout my career. I have worked very hard, but the paths that I've sort of gone down have not been because I was number one in my class or number one on the test. Most of those paths have been the result of relationships, and I think that's very important. If anything, it's become only more important as I've gotten later into my career. And so, I guess the other theme, though, I would say, is my father grew up on a dairy farm in central Illinois, and went to law school, and he was an ERISA attorney for 40 years at the same law firm. And I knew that wasn't going to be me. Bless his heart. But I just think that the world is a big place, and I think that there are a bunch of really interesting things out there, and I want to do them all. And so the tension for me has always been, trying to, not be jumping over and over and over again, and try to find a way to balance out doing something really well as a core thing, because I think that, you can be valuable and valued if you become expertise at a thing, but also figuring out creative ways on the margin or the periphery to allow myself to explore my natural curiosities. And so,
Mm,
ideas like taking a 6-month leave to join the public schools. I was acting general counsel for a portfolio company of a private equity firm sort of later in my career. I'm a transactional guy, but I argued a pro bono case in front of the Seventh Circuit. Like, to me,
mm.
those are small bets. Those are small things that won't disrupt my natural path, but I think in some ways have created a lot of optionality, and more than anything have just been a lot of fun and allowed me to feel like I'm getting to do, more than just sort of one core thing, and that's important to me.
Yeah, before we jump to the sort of more entrepreneurial endeavors, I kind of just wanted to ask. I remember when you did a 6 month stint in St. Louis with the superintendent, the school district, running sort of operations. If I'm not mistaken, like you're a relatively young guy. You had just, I think you had your first child, I believe, was it?
Yeah. So we have 4 children now. I feel very old. Our oldest is gonna be a senior in high school, and our youngest is 11.
God bless.
Well, thank you very much. But my daughter, Caroline,
Hmm.
and then we have 3 boys, but my oldest, Caroline, was born, when I was in law school, and then my second, my son Sam, was born while I worked for the public schools, and so that's another huge overlay. I mean, being a young associate at a law firm with a young family is really, really, really hard, and, bless my wife, she was sort of the glue that enabled me to be able to continue to be a lawyer at a big firm while still having a really young family. But you're exactly right. When we rolled down to St. Louis, my daughter was probably 2 years old. I was in my 20s. One of the first 2 days I was down there, I got a text, and, I had to Zoom over to North St. Louis to one of the churches on Sunday to get up in front of the congregation and encourage families to make sure that they got their kids, or, oftentimes their grandkids, to school that Monday for the first day. Sadly, I oversaw sort of everything that was not happening in the classroom. So transportation and food service and security and finance and IT and things like that. And 3 of my students were shot during the 6 months that I was there. So of course, I'd be in a meeting and I'd have to drop everything and zoom over to sort of the schools where those incidents happened. But that was very heavy for me. It was, to be honest, probably too heavy for me while I had sort of a young family at home. And then, of course, public school districts are really, really, really hard. There's the overlay of unions, and I think probably, I think I don't know. I think the team was probably about, I don't know, 2 to 400 people or so on my broader team, and, I'm sure some folks thought, "Well, he's not gonna be here forever, so we just sort of have to outlast him." So, it was a very, very challenging situation for me. I think one of the nice things was, in hindsight, it gave me a lot of perspective, and I think it reminded me that when you find a job after I rolled back to Kirkland, it sort of reminds you that, when you find yourself in a pretty good place, there's a high value to just putting your head down and working hard and sometimes just staying put for a while. But,
That's what I was gonna
that
ask.
was yeah.
It's you're exactly sort of getting to what I was trying to address, because I felt this too early in my career. I would make, I sort of got opportunities that sometimes were a bit ahead of my time back then, and different things sort of caught my attention, right? If you're early in your career, it could be compensation, title, seniority, getting the ability to do really cool things, and but sometimes it's sort of like the analogy I always used is if you don't have enough calf muscle, because you constantly take the elevator and not the stairs. You're just sort of jumping too quickly, and they're important lessons, of course, but it's also important to have the self awareness to recalibrate when you know you're not in the right position or framework.
Yeah, and a lot of this just comes down to, like, begin with the end in mind, right? What do you covet and what are your goals? And I think one of the things that I learned early in my career is that I couldn't map it out. That so much of life is serendipity, so much of life is, what's going on in the market. Maybe there are layoffs suddenly, or maybe, there are blue oceans that sort of open up. And so, one of the things I've always tried to be focused on is to find that balance. You don't want to be constantly chasing. I think if you're constantly chasing, it's going to be very, very hard to ever feel satisfied. But at the same time, I do think it's important to look at the world with the lens of serendipity, because interesting and unique things do arise from time to time. And when they do, you want to be ready to move and move hard and move fast.
What advice would you give to I know you talked a little bit about the personal aspects, of the difficulties of sort of growing your family, being a partner to your spouse, but, as an associate who's sort of growing into partnership, what advice, looking back, would you give to your younger self?
I mean, a lot, right? I didn't do it very well in full candor. So as a junior associate, I like to say, and it's not untrue, that I never missed kids, soccer practices or I did some coaching but I was never fully present. I would always have a phone in my ear. There was always some diligence call, right? Because in private equity, it's all about moving fast. And so, I wasn't fully there, and in hindsight, I would have done that differently. I gave up a lot I made that trade. I made it sort of intentionally at the time, but now that I've got an 11-year-old and I'm really trying to, be more present and be a little bit more balanced and, just realize how special, life moments are. It sort of also reminds me that when I was a junior associate, I probably wasn't fully there. What I would say though, like if we're just zooming out and looking at how do you be a successful junior associate, one of the things that I do tell people a lot is it's not, those first few years are not about what you know. It's not about substantive expertise. You're not drafting purchase agreements. You're not coming up with novel tax strategies or anything like that. And so often what I'll tell people is it's the basic things. You are able to project manage very, very well. You can put together a deal closing room and stay organized. You can put together a diligence memo and have it be complete. It really is in those early years that confluence of being able to work hard, being able to, not get emotional at 2 in the morning when, you're having to sort of fight through something that's in front of you. And it's really about just basic blocking and tackling. Now, it changes as you move forward, as you start to become a fourth or a fifth year associate and you're starting to see a path to make partner, then it's largely based upon your relationships. Is there somebody who really values you? And why would they value you? Well, because you're helping them to be better at what they do. And so the success model starts to evolve a little bit. Now, just staying organized and showing up and working hard sort of isn't enough. Now there needs to be strong relationships. Now your substantive abilities really do start to kick in, but that's all a bit of an evolution. But certainly in those early few years, from my perspective, it really is about working hard, staying organized, being kind, not being disruptive. Those are really sort of the key skills for those initial years.
Well, and also you sort of graduate from sort of getting a lot of work handed to you to now all of a sudden you're sort of in the hot seat, and you have to sort of navigate because you can have a lot of personal relationships, but navigating the transactional part, like how do you monetize on certain relationships where it makes sense and where you're the right fit? That's also an entirely different skill set. And pitching and being in a boardroom and speaking on a panel, all these things are you're sort of learning as you go for a lot of associates and sort of on that theme for you. I mean, you've worked with some of the biggest names, right, in the PE space, whether it was Bain Capital or GTCR or THL. I kind of wonder what were some of the consistent traits or strategies you saw in the top tier PE firms, being on the opposite side or guiding, advising, counseling them.
Folks who are principals at those sponsors, I mean, they're very, very, very smart.
Mm.
And they work very, very, very hard. One of the traits I would see is a doggedness too. You would think that these principals with these deep benches of outside lawyers, would mean that they themselves as principals don't need to roll up their sleeves and understand the structuring issue or understand the legal issue. And that's usually not true. I mean, most of these principals have a real interest in sitting down with you and getting into the muck, getting into the soup, and really understanding what the legal issue is and what are the potential alternatives. And they're willing to push you to make sure that you fully explored the art of the possible. And so I would just say these principles are fully committed to seeing through the success of that deal or navigating that issue in a way that I think becomes almost a little bit compounding. It allows them to really start to develop a mastery not only of the financial aspects to the deals that they're looking at, but also some of the operational and some of the legal aspects as well.
Understood. Now you take all these learnings, and I know you sort of talk about. I've heard you on several different podcasts saying you're sort of a risk off kind of guy, and
Right.
I like this term that you use. It's like a natural, logical evolution to your career. And while you say you're risk off, the thing you do after you become a retired partner is essentially a roll up strategy, a SaaS roll up strategy that you go and you. I think this is in 2015 is when you go and do this. You weren't a were you still at Katie?
Kirkland. Yeah.
Okay.
So it's funny because like if you just sort of read through my LinkedIn or my bio, it may not seem very logical, but I think in hindsight, to me, it's very logical. So
Hmm.
what happened was I'd been at Kirkland for a bunch of years. I'd made partner, and I was doing roll up deals, right? Because private equity sponsors, a huge part of their playbook, particularly over the past 15 or 20 years, has been find a highly fragmented space and roll it up. So I was doing those deals as a deal lawyer. And I was also invested in, a bunch of funds around private equity. So I was seeing these roll-ups as an investor as well, and sort of the power from an equity value creation when these roll-ups went well. In 2015, I sort of was scratching my head. I'd been at Kirkland, I'd been partner for a couple of years, and we live in a neat city north of the city where a bunch of folks around me, I'd go to events for our kids' school or our church, and I'd talk to the dads and the moms, and they would tell me all about what they were up to. And a lot of them were operators, they're in private equity, they're in venture, they're investment bankers. And I was starting to scratch my head and say, like, all lawyers do. The grass must be greener on the other side. Maybe I shouldn't be doing this law thing. Maybe I should get a little bit closer back to what I was doing at Amazon and try to get back sort of on the business side. Maybe be, an investor, maybe be an operator. And as I was having these conversations with some pretty big names, sort of in this world, I got really lucky. And several of them sort of shook me and said, like, listen, you've been playing upmarket and watching these really smart private equity sponsors do these roll-ups. You should go down market. You should take what you've learned and you should try to go out and either sponsor an operator. You should roll up your sleeves and buy your own small business. Basically what they were doing is they were giving me an education on this world that's existed for a long time, which is called entrepreneurship through acquisitions or search funds.
Mhm.
It's this corner of the market where MBA students, mid-career folks will go out and they'll either raise some capital or they'll tap an SBA 7A loan, and they'll go out and buy a small Main Street business, an HVAC business, a pest control business, an ITMSP, and they'll operate that business. Hopefully they'll grow it and sell it for for a profit down the road. And they were sort of shaking me and saying, this is what you should do. You should look to do a roll up at the subscale end of the market. And so I spent a lot of time digesting that. I started to develop a strong sense of conviction. And then I ended up finding somebody in my community who had bootstrapped a small software company.
Mhm.
He had greenfielded it, so he had started from scratch and eventually sold it. And he said, listen, I'm thinking about going back into the market and doing something again, but this time I think I want to buy something and I want to build it. Do you have any interest in partnering with me? And it really was sort of a perfect situation for me where I could stay at Kirkland, but I could continue to spend quite a bit of my time outside of my life practicing law, partnering with this individual. And what we ended up doing, we had a very specific thesis, but the thesis was basically buying low growth software businesses at a valuation multiple we felt was very, very attractive. And then our thesis was to really invest in the organic growth of these businesses. We ended up focusing on
Marketing.
MarTech.
Yeah,
That's
marketing.
exactly right.
Can
We
I
ended up on,
can I ask
yeah,
why,
go ahead.
real quick, Brian?
Yeah.
Why
So,
marketing tech? Because I guess
yeah,
one of the questions people might be wondering now is like, how do you know what to focus on? Is
yeah,
it a personal strength that you have? Is it
yeah.
expertise? Yeah, curious.
Yeah, no, there was a confluence of a bunch of things. So my partner had studied computer science at the University of Illinois. He was a software guy. So he knew that space really well. He had a prior exit in the space, so he knew how to how to grow a business and create equity value. So that was like a key attribute. But second, we started as it relates to where we were going to focus on within software. One part of it was just serendipity, right? We didn't want to do a search to find a particular industry in SaaS that could take 2 or 3 or 4 years. We wanted to move. And it happened to be that one of the businesses we saw early in our search process was in this MarTech space. These are businesses that productize organic and e-commerce search results. So it's sort of in the SEO space, which is a really, really, really big, important space. Anyone who sells anything online needs to know how they're performing across a bunch of different keywords on Google, right? So when a new pair of Air Jordans drops, if you sell Air Jordans in your Foot Locker or Amazon, it's really, really important that when a kid in Chicago types in new Air Jordans, that your website is on that first page, because there's a lot of science that shows that if you're in one of those first three slots, there's a high probability that you're going to get a share of those sales. But if you're on the second or the third page, you're probably not going to do very well. And so we ended up finding this sub niche of the SaaS space, but we were very, very focused on SaaS because we had this thesis around how low growth software companies get valued. At the time, and it still exists today, although it was a really big deal at the time, there's what's called the rule of 40. And the idea of the rule of 40 is when you look at the valuation of a software business, there's really two things that are important. One is the EBITDA margin, just the margin of the business. Is it profitable? But the other attribute, which I actually think is even more important, particularly at the time, it was much more important. It's the organic growth rate of that business. And we often would read about these headlines where these software companies would trade at 6 or 7 times revenue, not EBITDA, revenue. But the dirty little secret is, still sort of is true, that low growth software businesses don't trade at those sort of multiples. They only trade at 1 to 2 times revenue if they're only growing at 3 or 4% a year. And so we had a very specific thesis about going out and finding low growth, but high quality B2B enterprise software businesses that we could buy for like 1 to 2 times revenue. And then our thesis was that we could come in and underwrite, actually overinvest in the sales and the marketing function to be able to accelerate that growth trajectory and get those businesses growing at more of a 20 or a 25% clip. And the thesis was if we could do that, what would end up happening would be the buyer universe would change. We would start to get private equity portfolio company buyers interested in what we were doing, and they'd be willing to pay a more normalized market valuation of around 5 to 6 or 7 times revenue. So we did that for about 2 years, 2.5 years. We bought 3 businesses. We put them together. We did a lot of work around growing those businesses organically. And then we ended up getting an inbound from a large private equity firm based on the West Coast. They were putting about $400 million into SaaS businesses like ours. And they ended up sending us a term sheet, and we ended up selling the platform around 2018, 2019.
I mean, having gone through sort of the full cycle of like starting from scratch, rolling up 3 businesses, exiting to a very notable firm like Alpine. If someone were to come to you today, because it's a very hot topic, as you know very well, you're teaching these courses, you're in this environment, you share a bunch of content on LinkedIn, and you sort of shared well, I think you also wrote, you make a strong case for ETA, but you've also written several op-eds. One, I believe, was published by Yale. And there's this whole talk about the silver tsunami, about how big this opportunity is for younger operators, and that, I think there's sort of a phasing out of businesses with older founders. And so there is this great opportunity now to potentially find, discounted businesses, building them up. But there's also a lot of noise. The market is being flooded, especially on the search fund side of things. So if someone came to you tomorrow and said, Brian, I'm super passionate about this. A student came to you and said, I want to start. What do you usually say is the first, I don't know, 1 to 10 things that you should start with as a checklist? Like, how do you actually get going on this?
So a lot to unpack. So one of the heads of Thoma Bravo, the large private equity firm, says, that the best time to buy a software business was 10 years ago. The second best day is tomorrow, right? And I think that's true here too. So zooming out,
Hmm.
I continue to believe that as crowded as the market continues to be for these small Main Street businesses, taking a phrase from Amazon, we're still at day one. I really believe that for a lot of reasons, and we can unpack why, I think that the AI story is actually only going to accelerate some of these tailwinds. But I believe owning a resilient, profitable local business that provides mission critical services to your community is absolutely, going to continue from an investability perspective or an investment perspective to be a great place to put your time and to put your capital. That's first. I talk to students, I talk to folks in the market almost every day who are thinking about going out and doing a search. And there are a few things that I'll tell them. First, being a small business owner is different than being a mercenary at Amazon or being a big law lawyer. Again, like there's nothing wrong with either path, but I do believe that there's this strong bifurcation between having a mercenary mentality and an owner or an operator mentality. So one of the things I really challenge them on, and again, there's no wrong answers. And maybe like me, you'll evolve over time. I sort of started as a mercenary and ended up becoming more of an entrepreneur or an owner. But really ask yourself honestly, am I at that stage in my life where I have high conviction on being an owner? Or am I at that stage? Maybe I've got young kids, I've got a mortgage on a house. I just had this conversation yesterday with somebody, maybe now isn't the right time to go out and bet it all on buying a small business and growing it. So that's sort of number two is just regardless of the substance of the execution, purely from a psychic perspective, to really ask yourself, what do I covet? What does success look like for me? And is this going to help me sort of capture it?
Mhm.
So that's sort of like comment number two. Comment number three, though, is I think that there are a bunch of advantages, particularly in the Midwest, to buy a small business. First, I think that we've done a huge disservice talking about why the path to riches as an entrepreneur is doing a startup for all the reasons you know. First, 80% of the venture capital in America gets distributed out to 3 states on the coast. For the most part, it's not getting fed into the Midwest. Second, if you create a startup, you have about a 10% probability to get to $1 million in revenue. You have about a 1% probability to get to $10 million of revenue. Third, you need a novel idea. Most people don't have a novel idea. And so I think we historically, particularly at these business schools, we've taught people that they should want to be the next Mark Zuckerberg. That if they want to be an entrepreneur, they should want to be the next Jeff Bezos. But I don't think we've done a good enough job of telling them how hard that is. And I don't think we've done a good enough job in telling them that they can be an entrepreneur without having to come up with that novel idea, without having to take that risk of getting to product market fit and getting to revenue. They can experience being an entrepreneur through this ETA path by going out and buying an existing resilient small business, becoming the owner operator, becoming the CEO, and working to master how to be an operator in that industry and growing that business and, more likely than not, eventually selling it for a profit. I think that's changing today. And I'm really excited that it's changing today. And I think it needs to change today, particularly in the Midwest. In the Midwest, we're so perfectly situated for these opportunities for folks who have some good experience to be able to explore this ETA space, to be able to explore going out and buying a small business and holding on to it for a while, learning how to become a proficient operator, which in itself is a wonderful skill to sort of have. So this is one of the things, as you mentioned, I've been writing about this. I speak about it a lot. I really have a strong heart for several reasons. First, I think that it's good. I think that these small businesses are good for our community. I think that to have a resilient local community, you need to have good, resilient local small businesses. And I want to be behind that. I want to support that. Second, I think that these businesses, they usually trade, if you're talking about a $500,000 to $1 million EBITDA business, that'll usually trade at 3 to 4 times EBITDA or 3 to 4 times cash flow or SDE. That's a very low relative valuation compared to bigger businesses that trade in the private equity world at 10 times EBITDA or 12 times EBITDA or 14 times EBITDA. And then finally, I'll tell folks that there are all sorts of advantages that enable you to go out and buy that small business. There's a very vibrant investment community that wants to put capital to work in small businesses because the return profile over the past 40 years has been very, very, very high. It's actually been much higher than the public markets. It's been much higher than the private equity markets. And then I'll also, tell them that there's this SBA 7A loan program, which will allow you to go out and borrow up to $5 million from a local community bank. That loan is partially guaranteed by the federal government. And that's a way that the federal government, from a policy perspective, has said, we want to promote entrepreneurship. We want to promote commerce in our local communities. And those loans, they're a really big deal. You got to provide a personal guarantee. If you own a house, you've got to provide a second lien or a mortgage on your house. So I'll counsel people, there's no free lunch here, but I first just want you to understand, what is this ETA thing? Because you probably know all about how to start a startup. You might not even know that there's this separate world of experiencing entrepreneurship. So just from a pattern awareness perspective, I want them to know that this world exists. And then I want them to start thinking about, from a conviction building perspective, is this the right fit for them? And maybe, is this the right fit for them at this moment in their career?
Yeah, very, very, very solid thoughts. I know we can speak endlessly about this and even continuation funds on the P side. So maybe we'll have to do episode 2.0 on all these topics. I guess and before I close on this thought, the one challenging thing I've always seen with smaller businesses, I don't know if you resonate with this, is just actually the reach out. Like in venture, as an example, deal flow is much easier because, there's sort of a defined path with pre-seed, seed investment. Startups reach out to VCs, there's conferences, meetups. It's very publicized. It's TechCrunch articles. The challenge with these businesses is they're very stealthy. In some cases, like nobody knows about them. They're in the suburbs or they're out of downtown, and it's run by like 6 to 10 people. So actual like getting in the door to begin with, and then managing that conversation from a business perspective, when maybe for the founders, it's the first time they've ever even thought of exiting. Like they don't have maybe the same P M&A acumen that you might have on the other side.
Yeah, no, you're absolutely right. So just to connect a couple of dots, and then I'll hit that. So I stayed at Kirkland for 17 years. Just recently, I pulled away to really, really focus on this, to really focus on partnering with some of my former students and other folks in the market who have decided that they want to spend the next 5 to 10 years of their life in scaling a small business. And you're absolutely right. It's a much more fragmented space. That's, often the beauty, though, too, is it's a less efficient space. Sometimes you are able to find that proprietary deal and, at a valuation multiple that's really attractive, that you wouldn't be able to get if that company were marketed by a sophisticated investment banker to a larger count of potential buyers. But to answer your question, yeah, there are some best practices that we use to locate these small businesses. First, there are probably several thousand sell-side brokers, even for these very small, $500,000 to $1.5 million EBITDA businesses. We spend a lot of our time interfacing with the broker community, intermediaries like accountants and lawyers, to be able to unlock these deals. And we probably see 100 deals a week at least, just by virtue of what comes in the door in these weekly blasts from these local sell side brokers. But then what we do, we're a really big fan of doing proprietary outreach. And so we'll pick industries. We really like electrical contracting. We like home health, we like HVAC, we like legal services. And what we will do is, once we pick an industry and a geographic location, we'll use some tools, and those tools will help us identify all of the companies with that SIC code within a geographic area. Those tools can often also provide us with phone numbers, email addresses around those companies. And then we'll get to work and we'll reach out to hundreds of businesses within that industry, within that geographic area. We'll email, we'll call, we'll email, and then we'll call. And what we're looking to do is to, start a conversation with a small subset of those targets to see whether any of those owners are interested in selling their business. As you can imagine, there are benefits to sourcing a deal through the brokers. There, you probably have a seller who's pretty serious about selling their business. The brokers probably sensitize them to a reasonable range of outcomes from a valuation perspective. On the other hand, when it comes to proprietary outreach, you really can from time to time find a diamond in the rough, but you'll have to talk to a bunch of sellers who either, aren't interested in selling their business. Maybe they're just collecting some data. And so, you get some traction with them, but you're not really getting any traction with them, or they just have no sense of what their business is worth in the market. And so you've got to be very careful. The thing you covet the most when you do one of these searches, and usually these small business searches last about 18 to 24 months, your biggest asset is really your time. And so you've got to be incredibly efficient in terms of your ability to score the probability that any of these conversations could lead to a deal that's bankable, that's investable. And so one of the things that I work with my partners on quite a bit is to try to suss that out. We want to build that robust funnel of potential target companies and industries that we like. But a big part of this is trying to figure out, for which of those target companies we want to make an offer and start to invest both the time and the capital in terms of, trying to move this forward into something that might be a real deal.
Amazing. I can't thank you enough. I know we're up on the hour. Quick rapid fire question is, what's something life sort of has taught you overall, personal, professional, that you always will carry with you?
I mean, I'm a really big believer that there's a famous quote, nothing in the world can take the place of persistence. I mean, I'll tell you, like, I've been incredibly fortunate and blessed throughout not only my career, but my life. But we all face challenges. And I've certainly, I have had to push through a bunch of walls, things that have felt very hard for me. And, I'm just a really big believer that, that we need to just keep moving forward. It's something that I talk to my kids about a lot. Those scary things often don't end up being that scary. Those hard things often, don't end up feeling as hard. And so, the biggest challenges in my life have been where I start to feel stuck. That's a very scary feeling for me personally. And so, one of the reasons, to one of your earlier points, that I wanted to sort of try things that may be on the periphery of sort of what I'm doing on a core basis is that it allows me to continue to get more comfortable with risk, hopefully in a carefully sized way, because I'm always, so enamored by folks who can just seemingly continue to take on things that to me would feel really, really, really hard and continue to just crash through walls. And I think the reason that they're able to do that, and it's something that I'm trying to improve on as well, is because they just have this innate sense of persistence. They're just willing to continue to pull themselves off the mat and get back up and get back into the ring or get back into the arena. And so that's one of the things that when I teach, I always will share with my students on the final day. I think whether you're a junior associate or a young dad, you're gonna have a lot of those hard life moments, and just figuring out a way to get back up and face the next new day, I think, is one of the most important skills that we can all try to reach in life. But I've really enjoyed our time together.
Likewise, Brian.
I'm really excited about the future for you and me, and I hope we can do this again.
Let's do this. Thank you, my friend.
Thank you very much.